Welcome to the Explainer. Today we're locking right in on the global polycarbonate market for the third week of August 2026. Now, if you're a trader or a manufacturer tuning in, well, you already know timing and data are literally everything in this industry. So we're going to break down the latest global trends, those crucial regional price shifts, and of course, future predictions so you can make some rapid, actionable decisions this week. Let's get right into the intelligence, shall we?
Okay, let's dive into this. All the hard data we're unpacking today comes directly from the folks at Polymer Bazaar. And their whole mission really just boils down to three powerful words: price, prediction, profit. They are laser-focused on delivering instant market intelligence straight to the people who actually need it most. You know, the pros right there on the front lines of the polymer trade.
So how do you actually get your hands on this crucial data? Well, it's a massive time saver. Polymer Bazaar runs this really slick WhatsApp chatbot where you can pull real-time polymer pricing, market news, price revisions, forecasts, and even official company price lists in under 5 seconds. Literally under 5 seconds. It's wild. Plus, it's available 24/7, no matter where you are. To get this specific weekly report fired directly to your phone, you just text WhatsApp PC to +91 93746 24365. Boom. Instant intelligence, right in your pocket.
Okay, before we zoom in on regional trading, we've got to take a step back. Let's look at the global macro view and anchor ourselves with the raw materials. Right now, your absolute key number for polycarbonate feedstock, bisphenol A, is sitting right at 9,250 RMB per metric ton. Think of this as your baseline. This underlying feedstock cost is basically the first domino that pushes everything else in the market. So keep that 9,250 figure tucked in the back of your mind as we start evaluating these regional markets.
Section 1. Western markets, dull but stable. Over in the U.S. market, feedstock costs were actually up, but incredibly dull demand meant FOB prices just kind of shrugged off those costs, staying totally stable at 112 cents per pound. Now, Europe, they're dealing with a completely different headache: active supply issues. Normally, you'd expect that to spike prices, right? But again, demand just stayed stubbornly dull, anchoring those prices right at 1,800 euros per metric ton DDP NWE. And this brilliantly illustrates how, in both regions, sluggish demand is acting like a heavy wet blanket over any rising costs or supply constraints.
Section 2. Asia, supply and shutdowns.
Looking closely at the Chinese market now, we are seeing some pretty immediate disruptions. Supply has absolutely sunk, and it's all due to these abrupt plant shutdowns. You know, when production facilities just unexpectedly go offline in a major trading hub like China, it sends instant shockwaves right through the local supply chain. So the sheer volume of polycarbonate flowing into the market has just suddenly, sharply constricted.
So how exactly are buyers reacting to the sudden squeeze? Well, converters in China definitely have less inventory on hand, but, and here's the interesting part, instead of panicking and hoarding, they are completely refraining from bulk purchases. They're buying strictly on a need basis. It's really this highly cautious holding pattern. They know supply has sunk, for sure, but they absolutely refuse to overextend on bulk orders right now. They're just opting to keep the lights on, purchasing only what is absolutely necessary for their immediate production runs.
Let's move to and see how this builds in Section 3. The Indian buying pulse, strengthening demand.
All right, looking at the precise numbers on the ground, these are your Indian market spot prices, ex-GST. Down in Mumbai, polycarbonate is being assessed right around 215 to 216 rupees per kilo. Meanwhile, up north in Delhi, it's tracking just a fraction higher at 218 to 219. Overall, though, these spot prices have stayed largely stable, which really provides a fantastic, predictable foundation for traders who are looking to execute deals this week.
But hey, don't mistake those stable prices for a quiet market. The true underlying momentum in India shows that market activity is actually improving quite a bit, and buying is demonstrably strengthening. So what's driving this? It all comes down to lower domestic inventories. Because that local stock is so depleted right now, it's actively supporting and really forcing trade. Buyers literally have to step into the market to replenish their materials, and that's creating a much more vibrant, dynamic environment compared to that heavy dullness we were just looking at in the West. Section 4. The final verdict: actionable intelligence.
Okay, we've unpacked the global feedstock baseline, that sluggish Western demand, the constrained Chinese supply, and of course, the active trading pulse in India, so the crucial point is captured perfectly in Polymer Bazaar's official recommendation. They state traders might raise their open bazaar prices due to strengthening demand, so we suggest buying.
Now, that is a definitive, highly confident stance, because domestic inventories are running low and demand is actively strengthening, especially in markets like India. That window to buy before traders start hiking up their open market prices, it's closing. The data points to a very clear move here. Get into the market and buy now.
Which leads us to our final question for you today. Inventories are low and demand is strengthening. So, will you secure your polycarbonate before those prices rise? Look, the global data is clearly showing a shift in momentum, particularly over in the East. You've got the instant market intelligence, you understand the spot prices, and you have the forecast right in front of you. Now it's time to decide your next immediate move in the market. Thanks so much for joining me on this explainer. Go use this data to your advantage, and as always, stay ahead of the curve.